What is up, everybody? You know, I always start this podcast off by showing love to those companies who help make this show possible. First is my friends over at Bluon. Guys, you know I've talked about them a million times, and we had them come on here and talk about it. If you have not checked out Bluon's Master Mechanic AI tech support, it's pretty amazing. I challenge all of you to go on and try to prove it wrong. Ask it questions as a tech, literally. Let that thing tell you how to fix something. Remember, like any AI, the more information you give it, the better answers it's going to give you. I literally asked it what would be the best Christmas gift to buy an HVAC tech, and it came back and told me. It's really neat. I've been messing with it. Also, remember, this thing speaks Spanish. So to any of my Spanish-speaking listeners out there, this thing can speak Spanish. You don't have to try to type in English or make it hard. You can literally speak Spanish to it, and it will still get you the answers that you need. Just always remember, the more information that you give it, the better information it will give back to you. All right? So everybody go check out Master Mechanic from Bluon. I promise you to give it a try. And if, God forbid, you find something like, hey, this set me in an okay direction, but it should have took me here, let Bluon know. Bluon is an amazing company where if they make a mistake or they can make something better, no matter how new it is, they will continue to go back to the drawing board to make it better and better and better for somebody to use. So check out Master Mechanic from my friends over at Bluon. And remember, they are upgrading the HVAC industry. Next, guys, my friends at Yellow Jacket, I want to tell you guys something so bad, but I can't. Yellow Jacket sent me something that's actually sitting behind me that is, excuse my language, fucking amazing. And I'm going to make some videos and stuff with it, but you guys can't see it because it's being released at AHR in Chicago. And I want to tell you this. When a lot of you make comments on social media and in different places, and you think that manufacturers aren't listening, let me just tell you, they're listening, okay? That's why I tell people to give your opinions about products. Just don't be a dick about it. Say what you have to say because there's somebody from those teams reading those comments. You guys are their customers. You're the end game. You're who they're trying to sell to. So they listen to what you have to say. And Yellow Jacket knocked this out of the park. They really, really did. It is absolutely amazing, and I cannot wait till I can show this to you guys and show you videos because it's awesome. That's all I can say. They listen to you. But with that being said, I do have a bunch of giveaways coming with them. It's just a sequence they wanted me to do, so that's the only reason I'm waiting. So hang tight. But pretty much all three of these things you see on screen, probably not the turbo recovery, only because I'm not trying to pay $9,000 to ship it. We'll see. But at least the combustion analyzer and the YJack Mano, I will have to give away. I will be giving away those shortly. It'll probably be right after the first of the year, to be honest, so stay tuned for that. With that being said, guys, remember 70 years of expertise built in to every tool. Let's get on to the show. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. God bless the United States, and thank you to all those men and women who defend it.
Welcome to the #1 rated HVAC podcast. If you're looking to grow in the HVAC industry, then you're in the right spot. Blue collar people talking about blue collar shit. Let's get better together. So turn up the volume, buckle your seatbelt, and let's welcome your host, Gil KV Jr.
What is up, everybody? Welcome back to the HVAC Uncensored Podcast. I am your host, Gil Cavey Jr. Here we are, another Wednesday, another hump day, and another amazing show for you guys. Before we move on, I want to say this. You guys know I'm a man of my word. Last week when Gene Slade was supposed to come on, and I was upset in the beginning because I thought that he canceled 10 minutes before. Gene actually messaged me earlier than that. It was just on Messenger and I didn't see it. So I want to be fair and just say that Gene was very apologetic. Something happened and he did message me sooner. So fair is fair, and I want to be real. I was upset, but I did miss a message. He did send it to me, so I want to make sure I put that out in the ether. It is what it is. If I missed it, that's on me, not on him. So I wanted to make sure I say that. So with that being said, guys, great show for everybody tonight. I want to thank everybody for being here. I'll try to give some hellos real fast to Mr. Rookie, my brother from another mother. Thank you. Mr. Jason Johnson, another one. Mr. C. Young. Let's see. Comfort Medic. Hello. Mr. Kraus. What is up, my man? Chris Miller. Hello. Make sure I'm not, there's more names. If I'm missing you, I'm sorry. And if you're on Facebook, it doesn't give your name. So hello to everybody on Facebook as well. But with that being said, man, there's a great show tonight. And I always tell everybody that you should plan your end game when you get into HVAC. We can't abuse our bodies for all these years. And this is you're a business owner too, for business owners to do different things. And we have a guest tonight that this is what he specializes in. And I love having these conversations. I want you guys to be well off. I want all of you to make as much money as you need to make to live a happy life, to get the things that you want, to go on vacation, whatever it is, whatever makes you happy. And that's why I love these shows. But I want you guys to listen, and I want you to ask legitimate questions that can benefit you in your financial situation. With that being said, guys, amazing show tonight that I have Mr. Grant Bledsoe. He is the founder and owner of Three Oaks Wealth. Let's put our hands together and welcome him to the show. What's up, buddy?
Hey, not too much. Thanks for having me on.
Yeah.
Your setup is awesome. I've got to say, you've got this whole thing totally dialed in.
Thank you. I appreciate that. It's been a work in process. I guess I'll pat myself on the why I won HVAC Podcast of the Year last year.
You got that right next to your chair, coincidentally.
Yeah. People are like, that's always so close. I'm like, yeah, it sits over there. Sorry, I slept with it for the first couple of weeks. But thank you. I appreciate that. This is like I said, it's fun, and because of the money, I have to hide it and get to have fun gadgets to play with. So I'm going to enjoy the podcast as long as it goes. It could end at any time, but I'm going to enjoy it while it's here.
You deserve it.
Thank you. With that being said, Grant, I guess let the listeners and the people watching know a little bit about who you are and what you do, my friend.
Yeah, so Three Oaks Wealth is my business. I'm a financial planner by trade. I've been in the industry for about 20 years. The best way to describe what we do is we help people, a lot of our clients are business owners, do the best they can with what they have. That's the whole name of the game. And you really hit the nail on the head a minute ago. The whole idea here is most of us probably don't want to work every single day up until the day that we croak. And taking steps today financially that are going to help you, your future self out, your family, whatever it is that you want to do in your life down the road, there's a lot of stuff you can be doing today to set that up. And if you postpone that or don't do it, your future self is probably going to be kind of pissed at you because you might be in a position where you're, as you put it, your body is starting to fail you. You don't really want to crank it out for another couple of years, but you don't have a choice and you really have to. So we help people manage the cash flow, not pay any more than they need to in tax, invest money, set up qualified retirement plans, make sure they have their insurance and estate planning all dialed in. And when you think of all your finances, all this, there are a whole bunch of different topics that are related that really touch each other. Cash flow and debt management, risk management and insurance, the investments, the retirement, business planning, education planning for the kids. Maybe that's important to you. If you pull one string in one of those topics, it's going to impact everything else that you have going on. And the whole idea is pointing all that stuff in the same direction to help propel you toward whatever it is that you're trying to do in your career and your life. And the landscape's a little bit different for employees than it is for business owners, but there are still a whole lot of strings you can pull on either side just to make sure that it's all working for your benefit long term.
Yeah, it's so in two things that I've always say and I've learned along the years is one, when you retire, how do you want to live? Because Social Security is not going to be enough, you know. And do you want to continue the same quality of life? And the other thing is, as a business, knowing how to invest, because there's a fine line between investing and embezzlement. So and I've actually heard that from people. They're like, you have to do it the right way, and if you don't, you can actually get yourself in trouble. Like as far as like going to buy a piece of property, like, oh, I bought a rental house. Well, okay, well, you got to be careful how you do that and how you use that money. Not saying you can't do it, but you have to make sure you go do the right process, or you take a good thing and turn it into a bad thing.
Yeah, you can definitely get yourself into trouble. But in general, the theme here is that the government wants us all to be well off in retirement. They give us all sorts of incentives and opportunities to save for our future and give us all these tax breaks if we just play by their rules and check the right boxes. But you have to do that properly. And if you don't, you screw it up, you can get yourself into a lot of trouble with the IRS and your local tax authority or legal authorities too.
Yeah, no, that's very true. So, I know your bread and butter is helping, business owners, and you do this from all different sizes, from the little guy to the big guy.
Mostly the smaller guys. So most of our clients are fewer than 50 employees, I would say. We do have a few business owners that are doing more than like 5 or 8 million in revenue, but most of them are under that threshold. And the reason that we focus on that is once you get into the larger sizes of businesses, you have like an executive suite. You probably have a CFO that's handling all the tax and cash flow for you, and it's just a really robust organization. But under that amount, think of your local HVAC owner that's doing about $1 million in revenue. They probably have a team that they're working with. Well, they definitely have a team of employees that they're working with, but they're probably handling all the financial stuff themselves. You might have a bookkeeper, but what happens? You bill your clients, they pay you, and then cash starts to accumulate in the bank account, and you pay expenses out of it. But most people in that situation don't really have a good framework for paying themselves out of the bank account. When and how am I going to pay myself? What am I going to do within that business bank account to reduce taxation? Am I taking any of it out to save for my future in some kind of qualified retirement plan like an IRA or a 401k? There's just not a whole lot of thought to that. We've got one client who's he builds model homes. He's in construction in Central California. I'm in Sacramento, so it's not too far away. And we were talking 3 weeks ago, and he's got like $750,000 just sitting in the company checking account, earning 0%. Ugh. Because he's been busy, and we haven't had a chance to talk about it. There are a whole lot of things that he could do to take that out of his taxable income and earn more interest in the meantime. Meanwhile, not impacting his future ability to make payroll and fund all the other expenses that he has going on as a business. So it's that demographic that you probably don't have a CFO at your side guiding you, and we can step in and really add a lot of value.
That's awesome. So all the different things that you handle, it's just wealth, like guiding them what to do. It's not like so a $1 million company, they have their bookkeeper. You work in conjunction with all that. They give you like a P&L and a balance sheet, and you help them. Hey, you made this much money. Profit, looks like it's growth. Because I mean, I know they say that you want to be like, at least 15%. Because if you're like 6 or 7, you have no cash flow. If you can be, we try to be like 25 so that we can invest back into the company and be healthy. And then you just help determine what portion they should invest in and what to do with it per se.
Yeah, that's part of it. The other part is, all right, what's your mortgage payment at home? What do you need to live off of? How much are you taking out, right? And if you leave the cash in the company in a company account, but meanwhile you're putting your groceries on the credit card, you're probably not setting yourself up for long-term success because the bank's going to charge you an arm and a leg on interest on the credit card. So it's really aligning those two things. What is your lifestyle costing at home? what's going on in the business and what strings can you pull to optimize the whole thing. And that might be, changing the form of organization within the business. It's definitely taking a look down the P&L and at the balance sheet and looking at profitability. And if you're running too lean on margins, then that's kind of a dangerous road to go down, as you know. Especially if you hit lean times, you've got to make some pretty tough decisions about what to do with some of those expenses if you're only running at 6 or 7%. So yeah, it's all that stuff. And in a nutshell, everybody has a vision of what you want to do with the business, with your company. You have a vision of what you want to do personally over the rest of your career. It's blending those two things. And the other thing that we haven't talked about quite yet is, if you're doing $1 million in an HVAC business, that business has value in and of itself, right? A lot of people in HVAC are selling out to private equity these days. Now that interest rates are a little bit higher, that might be turning around on us a little bit, but there's value in what you're doing and being a good steward of that value and that equity. And whenever the time is right for you to step away and retire, whether that's selling to an employee, selling to private equity, selling to some other third party, we know what strings to pull within the business to maximize the value for your benefit, and then structuring the deal in a way that's going to align with your own retirement aspirations.
Yeah, no, that makes perfect sense. And also seeing it, and the owner itself depends. So when it comes to Beltway, I'm the general manager. I don't own it. It's one of my best friends, Ryan, and seeing what he does is amazing, because I've worked for, being in this trade for a long time. I've worked for other owners, obviously. And everybody always thinks the owner's sitting back getting fat, in his office counting his money. And I know, because I see the numbers, I see the P&L, I see the bank account, I know what he takes home. And seeing an owner who puts more back into the company than he takes from it, like he rather guys go to training and stuff like that than take it. And not saying that he doesn't do well for himself and he's hurting for anything, but the fact that he could be taking a lot more than he does is a good sign. And the fact that our company culture is good and things like that. So that's why I think a lot of these younger owners, because I'm 40, Ryan is, 28, so I'm an old man compared to him, but he, having this culture where people want to work and they're putting money back into it. I get it. Times get tough, work gets slow, and we try to plan for those moments when it does get lean, when, especially in this area in Maryland, normally our summer is 3-4 months long if we're lucky, and hope it snows. So you got to plan around those times, because you're going to have some months where you're probably going to end in the red. And it's not time to panic. You just got to make sure that you make up for it other times of the year. So for us, we're sitting right now, we're like a 5 million-ish company. We want to be 10. So for us, with a company, like, what would be some good investments? Like for you, like you should invest in blah. I guess I'm just using this as an example, but it could be anybody really.
Yeah. I think one mistake people often make is dwelling too much on the okay, what stuff should I buy? Right. The more important thing off the bat is getting cash into some vehicle that's going to give you a tax advantage. Okay, and we can sit here and argue: should you be buying Tesla or Procter and Gamble or Amazon or some other stock? That has been beaten to death. And after having done this for a couple decades, the returns that you're going to get in your investment account, regardless of what you buy, are more based on your behavior than your choice of what you're actually buying. And cryptocurrency is popular these days. There's the Amazons and the Netflix of the world. There is a mountain of academic research and empirical data out there that tells us that the path to the best investment outcome is to just be super diversified and be in the markets all the time. So if you've got a few $1,000 laying around that you want to save and invest for you and your family's well-being down the road, you're very much more likely to reach a better outcome when it's all said and done by just buying a really boring index fund of like a couple thousand different stocks. Don't play in the crypto, don't play in the Tesla, right? And the reason is that If you just buy it all, there are going to be a few companies within that subset of 1 or 2,000 stocks that do really, really, really well. And there are going to be a few that fail. But by buying them all, your returns are more likely to resemble the long-term market returns, which are, between 7.5% and 9.5% a year. And that's plenty, that's plenty to retire on if you have a little bit of cash left over. You find the right type of account to park it in and invest it, and then just let the market do the work for you. It's a much more consistent and less stressful path to reaching a good outcome.
Yeah, and when I got and I won't explain it properly, but when I learned, about compounding interest and ways to be able to do different accounts. So we have a 401k through the company that I literally took money out of that and put it into this particular IRA that I forget the name of it, but the benefits of the compounding interest. I've literally made more money off of the money that I've put on that IRA than I have in my 401k. Like so it's been crazy. And then I have some, insurance policies, but the way I have them set up about the interest with those two, and then I could borrow against them if need be. But I've been taught the same thing. Like I have a certain amount that I'll keep in a savings account. But then I try to put the rest of it in something that's going to make me money. Because a typical savings account, you're not making shit off of that. It's just easy access to transfer over. But, that small percentage I'm getting off of that isn't going to help me do anything in life.
You're right. It's not going to move mountains, right? You want to take some savings and put it in stuff that's going to grow and keep growing and just work in the background for your benefit all the time. That being said, it's really important for business owners and employees both just to have, if you can stomach it, a couple months worth of expenses in cash in the savings account, just sitting there for a rainy day. Because what you don't want to do is be in a position, maybe those hard times come over the winter and you don't get as many calls, you get laid off all of a sudden. What are you going to do? You don't want to put the grocery bills on the credit card. You need some cash laying around for a rainy day. And if you don't have that cash laying around, either you're maxing out your credit limits all of a sudden, or you're dipping into those long-term investments at a really inconvenient time before they're ready to have you access them. And coincidentally, the economic environment when it might be slow business-wise or when you might get laid off, oftentimes those are not very good times in the stock market too, right? Yeah. So we're trying to buy low and sell high and let the power of compounding work to our advantage. And if you don't touch it, that's the best way to let it run for your benefit.
Yeah, there's some other things that I won't, like real estate has made more millionaires than any other thing. So I've learned some things when it comes to real estate that you can actually buy properties without ever using any of your own money. That's a whole nother podcast I won't get into, but that's been a good for me as well. I just can't find my own house right now. Trying to find a house in Maryland right now sucks, and I'm very picky. But yeah, and I want, these small business owners, which most of my friends that on here, a lot of them are that small business owner, or they're that tech that's been busting their ass for 15, 20 years. And I want all of you there's so many simple things that you can do that just take a little bit of time and effort to really set you up and give you some financial freedom to where your money works for you. The things that I've been shown have been life-changing, and it's family, friends that have guided me, and I've trusted them. Thank God there's a few things that didn't work out, as people said, but most of them have worked. And I thank God that I did it, because it's put me in the position now to be able to do some things that I wouldn't have been able to do if I didn't have those kind of things, Somebody asked, you may know this, I don't know about investing in precious metals. I don't know if that's
I've never been a huge fan of investing in precious metals. Copper has done really well over the last decade. Gold has been like the age-old precious metal opportunity. The reason I don't like so here's the argument for investing in precious metals. Gold has been used as a store of value and a medium of exchange for like thousands of years, right? People used to trade gold coins. And now we're in a situation, and we can talk about this too if you like. We're in a situation where the US dollar is no longer backed by gold. We used to be on the gold standard prior to 1971, which means that you could actually exchange your dollars for a certain amount of gold coins. And then we hit Nixon was in office, we were in Vietnam, and we left the gold standard because that was the best choice economically. And that's when we hit high inflation and interest rates in the 80s. So with inflation and the fact that we're in fiat currency that's not backed by gold or anything else, the value of the US dollar just kind of floats around on its own based on supply and demand dynamics. And so if you're someone who thinks that the US dollar is going to shit and inflation is never going to stop, and gold is a better store and long-term maintainer of your wealth, that would be a good argument for buying gold. Personally, I don't think that's going to happen as drastic as quickly as a lot of people are fearful it will. And I'm not a big fan of buying gold because gold doesn't do anything for you. It's just this piece of metal that's shiny that we like to make jewelry out of.
Yeah.
If you're someone who really believes that the US dollar is going to totally go to shit and you'd rather have holdings in gold, you're better off buying a gold miner. And for me, I am far more optimistic about putting my dollars in a stock of a corporation. When you buy a share of stock, you own a small piece of that corporation. And you and the other shareholders get to elect the board of directors. The board of directors are responsible for hiring and firing the CEO and make sure that they're doing their job and that the performance of the stock is adequate, right? So there's this nice system of legal checks and balances for this profit-making machine. That's what a corporation is a profit-making machine. That's for your benefit as a shareholder when you buy a share of stock. When you buy gold, it's just a piece of gold. There's nothing happening to make you money. You're expecting the future value to go up is the only thing. And that's never been a strong enough argument.
Yeah, no, I agree. Maybe to have a little bit laying around, but to make that be your sole investment, I agree 100%. And something you touched on before, like I have a certain amount of cash. It's nothing crazy, so nobody break into my house. I got a certain amount of cash that I keep locked in the safe just to have cash if, God forbid, something happens. There's also a gun in there, as well as some other places, so don't come to my house. But when I was trying to finally get financial, because I was horrible with money, horrible. And that's how I started, where it was, okay, I want to make sure to stop living week to week. And there's a lot of people out there that do this and been there, done that. So don't think that you're any different than most people. I kept saying, okay, I want to try to get 1 month's worth of bills in the bank. Then it was 2 months, then it was 3 months. And then it took a lot of time to start to build up to now that I have that little cushion. And I think people really need to think that way. In the time that you're doing that, you got to cut some things out. You can't be frivolous and buying dumb shit and expect to be able to get to where you want. There's got to be pros and cons. And it was tough for a guy that likes an impulse buyer that likes to see things. It was hard, but now doing that and having the things that I've done, now I can afford to be like, oh man, I'd love to buy a new pair of shoes or buy a jacket or whatever it is, and be able to do it and know that I'm not going to take food off the table or, oh shit, the utility bill's not getting paid this month because I spent money. So you have to be diligent when it comes to that. I guess when it comes to some of the taxes things, and we'll start when it comes to business. What are some things that are legitimate write-offs? Because I think a lot of people think some things are write-offs that aren't, and some things are write-offs that you wouldn't think could be.
There's a long list of stuff that's eligible. The IRS definition is it's got to be ordinary and necessary, I believe is their terminology. And so you can pull up on a quick Google search, any list of tax potential tax deductions. I'll list a couple that I think are really, really good opportunities that people kind of overlook. If any of this gets too technical, just tell me to shut up, and I can give you a 30,000 foot view.
Yeah.
So one of them is called the qualified business income deduction. And so I'll give you an example. Let's say that you have an LLC, and an LLC is a pass-through business entity, which means that the company doesn't file its own tax return. You report all the revenues and expenses on your own tax return on Schedule C. So let's say that you have $500,000 of revenue and $400,000 of expenses. And so remember, accounting 101, we take our revenues, we subtract all our expenses, and then you have net profit that's left over. That's your self-employment income. Well, that $100,000 you get to pay tax on as the owner of the business, self-employment tax and income tax. But part of Trump's tax cuts back in 2017 incorporated what's called the business income deduction. And what that means is that any qualified business income is subject to a 20% deduction. So now instead of paying tax on the $100,000, you're paying tax on $80,000. And so that's a commonly overlooked deduction that I think people don't look hard at and really appreciate. And the reason is that it's kind of obscure and opaque. Now, when you start making more money, more than, call it $300,000 or so, that deduction starts to go away, depending on what kind of business you're in. My business is financial planning. It's considered a specialized service business. And so for me, as my income goes up above certain levels, the deduction just goes away entirely. I don't get to claim it. For HVAC companies, it's classified as a different type of business. And as soon as your income exceeds that threshold, now the deduction starts to go away, but not entirely, based on a couple of factors. It's based on what your total payrolls of people you're employing are, and the size of your balance sheet. So I'll stop right there because it can get really technical really quick. But 20% of all the income you have coming off of your business is potentially a really big deduction. And just being aware of that and making business decisions that will maximize that can definitely move the needle.
Yeah, that's awesome, and that's great advice, because that's how I do. The podcast is an LLC, and I'm in the process of trying to create another LLC to where one pays the other kind of deal. It's somebody explained it to me, like you can hide some things, and this one buys it and this one pays the payment. And I don't know the details, so I'll explain it and sound stupid. But no, that makes perfect sense. See, Trump did something awesome. But yeah, man, I had a brain fart there for a minute.
Let me give you another one that I think comes up for a lot of people in this situation too, if that's okay.
Yeah.
So you mentioned the LLC. There are different types of business entities. If you don't do anything and you start operating a business, you're a sole proprietor, and you have to create a limited liability corporation and run your business through that, which is a good idea. It limits risk. Well, you also have the opportunity to incorporate, and maybe incorporate through an S corporation. And one convenient thing that the IRS lets us do is, if you have an LLC, you can actually file your taxes as an S corporation without formally incorporating. And that's really, really helpful for a couple of different reasons. So let's take that same example. You've got $500,000 in revenue and $400,000 of expenses. You have $100,000 left over. Well, that $100,000 is self-employment income in an LLC. That means that since you own the business, you're the employee and the employer, and you get to pay 15.3% tax on that $100,000 for self-employment. Okay. Now let's say that you file as an S corporation instead. Well, in an S corporation, you have to pay yourself a W-2 wage. So of that $100,000 left over, let's say that you pay yourself 50 grand a year in W-2 wages. That 50 grand, the business pays payroll tax of 7.65%. You pay Social Security and Medicare tax as the employee, also 7.65%. You add those two together, that's 15.3%. That's precisely why the self-employment tax is 15.3%. Business pays half, you pay half. So of the 100 grand left over, 50 of it comes out as W-2, but the other 50 grand that's remaining, you do not pay yourself a W-2 wage with, you just take it out as a profit distribution. When you do that, you don't pay that 15.3% tax at all. And so the opportunity here is if you're in that situation, you're starting to make a little bit of coin and you're filing as an LLC, well, you might want to run this by your accountant. It might make sense to file tax as an S corporation, because as soon as you're making more than like 80 grand in self-employment income, you can start to save some real money in taxes by doing that.
Well, I'm definitely doing that. So the podcast does more than that. So I have a good, he guides me pretty good. So and I'm not, to be honest, I know that I have it's an LLC, but I should know this and don't. I don't know what he filed under. I trust this, a person I trust enough that it normally makes out. But now I'm curious to know what he did last year and what he's going to do this year, because I know it got, like I told you, like I had to find things to buy and things to do because isn't it the first couple of years like you want to show loss? Like if you don't show loss, then the IRS is like once more. I mean, I'm probably saying that wrong, but
I've never encountered that. I think you always want to make money. You always want to make money, and from where I sit, I would much rather make an extra dollar of profit and have to pay tax on it than not make that extra dollar of profit. Now, as far as showing losses on the tax return early on in the life of a business, I don't know that makes you any more or less likely to come under scrutiny of audit. But I will tell you that the IRS is way underfunded right now. And it's exceedingly rare that we run into anybody who's currently dealing with an audit because they just don't have enough employees to cover what they're supposed to.
Even after the 80-something thousand people they hired?
Even then, and a lot of that, what was in that bill to give them more funding, got rescinded shortly after. So I don't know how many of those 80,000 actually got hired, to be totally honest, but we haven't seen the impact yet. Now, everybody out there, that should not be like a free pass to go crazy and report stuff that's not accurate on your taxes. If you evade taxes and lie, you will go to jail. This is not something that you mess around with.
No.
But just anecdotally, we just run into it that much because they're underfunded.
Yeah, we always say the IRS is one people you don't want to owe money to because they will get their money. They're the one, they'll just take it. And, oh, your house is mine now. That's not people that you want to owe money. Somebody asked a good question, and I can't explain this. The difference between an LLC and an S corp, and what actually is an S corp, and how does it work?
Yeah. So the most basic. Let's say Gil, you and I get together, and we want to start a new business. We want to start, selling ice cream cones or something like that. So we go buy a whole bunch of crap down at Costco, and then we sell ice cream to the general public. If we don't do anything, our business is a partnership, and you and I pay tax on that on our personal return. Now, we could go to a lawyer or go to LegalZoom or something like that. LegalZoom, I usually do not recommend. You can really get yourself in trouble using these online documents. Go to a lawyer. We could ask them for help creating a limited liability corporation, an LLC. And all the revenues and all the expenses of the business would be reported through that LLC. Now, the revenues and expenses still show up on our personal tax returns, okay? And we're responsible for paying the tax on the profits of the business through our personal returns. But we've officially created a separate entity. And that's really, really helpful if you're in this situation, because if somebody gets like E. coli from one of our ice cream cones and sues the hell out of us, they can't come after our house. They can only come after the assets in the LLC. And that's an important risk mitigation thing that a lot of people consider. Now, what is an S corporation? There are two types of corporations from a tax standpoint. So we could also go to the attorney and say, hey, screw the LLC. I want you to create a corporation for Grant and Gil. We'll call it the G&G corporation or whatever. There are two types of this, okay? And a C corporation is what all the big corporations in the United States are formed as. It's where if you buy a share of stock from the stock market or from a brokerage firm, the company you're buying shares of is absolutely a C corporation. And what that means is that the corporation pays taxes on the profits at the entity level. So if we have $1 million of revenue and $700,000 of expenses and $300,000 of profits, that means that the business, the corporation, pays tax on that $300,000 at the corporate tax rate. Now, if it's an S corporation, that's different. It's still a corporation from a legal perspective, but from a tax perspective, now Gil and Grant are sharing the responsibility for paying the tax on that $300,000 on through our personal tax returns. So if we have $1 million of revenue, $700,000 of expenses in an S corporation, Gil and Grant have to take some money out of the business as W-2 wages, like that example we were talking about a minute ago. But any of those profits that are left over at the bottom of the P&L, so $300,000 in this case, if we're 50-50 owners, you get $150,000, I get $150,000. And we have to report that $150,000 on our personal tax returns. So for most people listening, if this is a possibility for you, you're probably going to be looking at an S corporation. In S corporation, you cannot have more than 100 owners. And there are some other stipulations that are not coming to the top of my head and I can't articulate. But until you have like a really substantial, bigger business, that's usually the profile where C corporations start to make more sense. I have run into situations where smaller businesses are C corps. It just depends on the circumstances.
So legality, I know how you said like the LLC, how that works. So say I have an S corp and we sell bad ice cream and somebody comes after us. How are we protected in that way?
If we have an S corp, so an S corporation is set up the same way from an asset protection perspective. LLC stands for Limited Liability Corporation. It's just a special legal type of corporation. So if it's an LLC and somebody eats bad ice cream cone and sues us, they can come after the assets of that LLC. They can't come after our house. Same goes for an S corporation. It's just a different type of corporation. They can come after the assets and all our inventory and all that nonsense. They can't come after our house. Now, that's if somebody eats a bad ice cream, I mean, there are tons of cases. You hear people suing the bejesus out of business owners and finding ways to pierce. They call that piercing the corporate veil. Angry plaintiffs often find a way around it if they're willing to pay an expensive attorney. But that's how it's supposed to work.
No, that makes perfect sense. We got to talking and time has whizzed by, and I told you I wouldn't keep you more than an hour, and we're like 10 minutes away from that. So I guess I would love to know, what is your top 3 pieces of business advice for a business owner and your top 3 pieces of business advice for a technician out there? They might be the same 3 things. I don't know.
I think for business owners, I see a lot of people who are like 5 years into their business and they don't have a bank account specifically for their business. Their books are shit. And they're digging themselves into a big hole of complexity. And so the first thing that I would say, and this is kind of basic, is if you're a business owner, go out and open a bank account in the name of your business. Customers should pay you into that account and your expenses should come out of that account. Don't screw around with commingling that with your personal bank accounts. It's not illegal, right? That your accountant will tell you, yeah, that's totally fine. We'll just fund your business expenses. That's all true. It's going to make your life so much easier down the road if you just have a different account for all your business operations. That's number one. Number two, I would say have a plan for how and when you're going to pay yourself out of that business account. And like we were talking about earlier, what generally happens is people start to accumulate cash in the business account, and then at some point it comes time to need to draw some out to pay their own mortgage or the grocery bill or whatever. They're kind of concerned. They don't want to pay any additional tax on that. They're not sure what their upcoming business expenses are going to be, and they're just generally reluctant. So build up a little bit of cash buffer in your business account, maybe at least a couple months worth of expenses. And at that point, start distributing it back to yourself and just have a framework that aligns with the rest of your business planning. And then the third one would be that for business owners, our businesses are like our babies, right? Nobody thinks that their baby's hideous, but sometimes your business has horns coming out of its head and it's just ugly. And so we don't want to put all our financial eggs in the basket of, I'm going to run this thing and I'm going to grow it and then I'm going to sell it to some third party. And the money that I get for my business down the road is what's going to fund my retirement. As you go along, just take a little bit out of your income and park it in a tax advantage retirement plan, put it in a boring diversified index fund, and then just let it run for your benefit. Because you're taking a huge amount of risk as an entrepreneur running your company. And there are a lot of things that can go wrong to where you might not get what you think business is worth down the road, or, hey, maybe the environment's totally different and that's just not a viable path. So those are three things for business owners that come to mind. For employees, I think the number one thing is try to get, and you said it earlier, I've lived paycheck to paycheck too, and it sucks. But you got to find a way to either work more, work harder, or cut some things out to at least start with 1 month worth of living expenses in the bank. And we can talk about it conceptually, and that may or may not resonate. But what it's going to do when you have a little bit of cash in the bank is it's going to give you future options in the future. Doors are going to open for you. You're going to be able to take risks that you wouldn't have been able to take in your career, maybe with another job opportunity, as soon as you have a little bit of cash in the bank. So find a way to structure things to where every month you're spending a little bit less than you're earning, and put that cash aside just to open some doors for your own future. The second thing is, like you're talking about, the government wants us all to save for our retirement. They want us all to be okay, right? They don't want us to work every day up until the day that we croak. So they give us these crazy great tax advantages like 401k plans, IRAs, Roth IRAs are great options. Pick one and try to get a little bit of money in it for your future self and for your family. And then number three is don't ever stop improving. You can increase your income, I think, dramatically by just learning and trying to get. I'm a believer in the 1% better every day thing. That'll compound for you. And whether that's a little bit of knowledge about your day job or a little bit of knowledge about what your boss is going through running the business, it just opens doors for you down the road. And that is always going to pay dividends. There is no downside to that kind of hustle.
Well, amen. I think that's great advice. And it's something that I literally say at the end of every podcast about, keep trying to make yourself better and be better. There's always room to keep improving. So that's something that I preach. Somebody asked this, which this could be the same thing you just said. He said for businesses, hold on, let me find it. Where did it go?
Should you be following the comment? I've ignored all the comments.
Oh, it's fine. To be honest, half the time they're having their own conversations, but they've actually been, sometimes you don't want to know what they're talking about in there. Where did it go? Oh, for a company, how do you assess and manage their risk?
That's That's a tough one, and it varies a whole lot, industry to industry, company to company, situation to situation. You got a bunch of different types of risk. You've got liability risk. You've got the risk that install a furnace incorrectly and it burns the house down, and somebody sues you. You've got financial risk. If you took out a personal loan to start your company, you better have some revenues coming in so that you can make the payments on that thing and pay that down over time. You've got operational risk. You've got key employee risk. There are a million of them, and assessing that is really just a situation by situation thing. The framework that might be helpful there is just take a look at what is your like 1 and 3 year vision for the company. Where are you trying to take this thing over the next 12 months and over the next 36 months? What are the things that could get in the way of that would be most likely to derail you from those plans, and maybe start there.
Yeah, no, that makes perfect sense. And I've also, like, even I know with personal credit, like from being young and destroying my credit and then getting older and finally getting it fixed, I was like, hey, if I don't have the cash to buy it, then I'm not getting it. But, then people told me, hey, well, nowadays, rich people stay rich because they buy things with other people's money. Use credit to your advantage, but be smart. So we have credit cards that we use now, but I have the cash to pay for it. So it's like one of those things we use. And I think they say, like, when you have your credit cards, you should only be using like 15 to 30% of whatever your balance is, and make sure it's paid on time. That's why you keep good credit. And you're using credit to your advantage, and it's helping you versus you're living off of them.
Yeah. Yeah. You want to do those little things to maintain a good credit score so that when some big opportunity, maybe the house down the block from you that you really like, comes up for sale, maybe you are in a position because you have good credit to buy it and then keep your existing house and rent that out as an income property. Those are the kinds of doors that stay open when you use credit responsibly, because it just gives you flexibility to do cool stuff down the road.
Yeah, especially in nowadays world, it's something you have to have because you can only have so much cash to be able to do things. So, but we're at an hour, Grant. So I'm not going to keep you any longer. I know that we only scratched the surface, and to everybody listening, as far as what Grant does and how he helps businesses, and we touched on very small things because we kept going back and forth between businesses and things to help you guys as well, which isn't even something that Grant does. He helps businesses. So I will have a link to his website and the information to be able to get to Grant in the show notes. But if you're a small business out there and you feel like you are not making the most of your money, that you're not doing things right, I highly suggest that you guys hit up Grant and his company, Three Oaks Wealth. I'll have all the information. If God forbid you don't see it, email me and I'll get it for you. Grant, thank you so much for coming on. This time always goes by so fast. I know we kind of went back and forth on the different topics, but I really appreciate you coming on and providing some guidance on these things that most of us technicians and people like that don't know.
Well, thanks for having me, Gil. This was a lot of fun. I hope this was helpful. It's easy for us practitioners to kind of live in the technicalities and the numbers and the percentages and all that stuff, and communicating all these concepts in a way that's helpful to people is a bit of an art. So I hope this was helpful. But I enjoy being here, and yeah, you're doing good stuff here, man. Keep it up.
Thank you very much. And yeah, if you ever excuse me, you have the information, you're more than welcome to come back and we can have another conversation about whatever it is, or strictly talk, business, about dive into actually what you do. Like I said, I know we bounced around and I appreciate you doing that for me. But yeah, stay in touch and come back on. I'd love to do this again.
Right on. Likewise. Yeah, likewise.
Well, thank you, buddy. I appreciate you. I know you got to run. So have a good night and I look forward to talking to you soon.
Yeah, likewise, Gil. We'll talk to you soon.
All right, buddy. Have a good one. Well, so guys, that was I really appreciate Grant for doing that. He's very good at what he does when he helps businesses. So obviously, and just so you guys know, I'm always honest with you. Before the show, I asked Grant, "Hey, can we talk about some things that also financially helps technicians and stuff like that?" Because I know that that's what I have more of that listens to me, which is not what Grant does. But I think he gave some awesome gold nuggets and awesome advice to be able to advise some of you out there. To be able to help your finances. Any business owners out there, like he said, if you're in that small business range, which would be Beltway, maybe I should tell Ryan to reach out to him. Anybody in that small business range, if you're unsure, or if you know, hey, I'm making good profit, but I don't know what to do to set myself up, reach out to him. It's literally threeoakswealth.com. Reach out to him and find out, how he can help you and help guide you to, for your retirement. So it's thank you for the hats, man. The hats are cool. We have ones with white backs too. And then we just got these new jackets in today. So guys, I always say this to each and every one of you, man, because you guys know me, man. I'm a second generation in this trade. I watched my dad work his fucking balls off. And if it wasn't for a military pension and my dad getting cancer, he wouldn't have had a fucking retirement. He would have worked his whole life to have nothing. And I promised myself that I would never be that way. Thank God I have an amazing family. My brother is very financially savvy and helps guide me with things. And I don't want any of you to have that because this is a grueling industry. It takes a toll on your body, your mind, and I want all of you to make as much as you possibly can, but also understand that the money that you're making can be making money for you. So whatever you decide. So if you have say you have a good chunk in your checking account and then you have a couple of months worth of bills in your savings account, but then you have, say you're past that, say you have 6 months, take the 3 months worth and put it into something else that's going to make you money. That's what I'm trying to say to you guys. So ask people, go to a financial advisor. Like there is little things that you guys can do that you can make money off of that. And I've had people guide me and it was been life-changing. That I am able to do things now that I would never have been able to do and have financial freedom. Back in the day when I was a fucking addict and I had a couple dollars in my pocket and I was living week to week, it was okay, pay the bills. So I was a somewhat responsible fucking addict. I made sure the bills were paid and there was food on the table, but anything that was extra was going up my fucking nose. That's just the God's honest truth. You guys know I keep it 100 with you. And when I got myself straight, I was like, I'm not fucking living like this. I'm not doing this. And it was so hard to save money. It was so hard to save money. So see you, Jason. Appreciate you, brother. Speaking of that, everybody is going to AHR. I got 100 shirts made that I'm going to be giving away. I did more, but they could only get 100 done before I actually leave. So everybody that's there, let me know, and I will be giving out some shirts. But anyway, I won't go on some tangent. Just be smart, with your money. Save. When you retire, you want to be able to keep the same lifestyle that you're leading while you're working. Because I see too many people that they think they're going to retire. They have no 401k, no pension, no money set aside. And, they think they're going to live off Social Security. And then they have to move in with their kids and or sell their house, or they can't go out to dinner anymore. And I don't want that for any of you. That's what I'm trying to say. All right. I'll leave it at that. With that being said, man, I appreciate each and every one of you coming out here and watching this live. I appreciate you guys coming here and bullshit in the chat. I love seeing you guys every week. And to everybody that listens to this audio podcast after the fact, I appreciate you. So that being said, I'm going to close this thing out. Guys, remember, be safe out there, all right? Keep your head on the swivel. I know my man Rookie put it in the comments, but be safe, man. It's a crazy fucking world that we live in. I mean, fucking crazy. Turn on the news. You'll know what I'm talking about. driving, the disconnect, the breaker, whatever it is, just keep your head on a swivel. Don't get caught up in the moment. Slow down and be careful. I want each and every one of you to make it home the same way that you left. Okay? Do the little things. Set yourself apart from the next guy or girl. All right? Keep learning. Keep being better. Whether it's at work, where it's that side hustle that you've been wanting to do, or a hobby that you love, or whatever it is that floats your boat, keep fucking doing it and make it happen. All right. Like I said, I want all of you to be happy. I want you to make the money that you fucking deserve and be able to do whatever it is in life that makes you happy. And if I can help anybody do that, I don't know everything by any means, man. Never claim to. But if I can help somebody in any way, guidance in any kind of question, whether it's financial, work related, whatever, you guys know you can always email me, hvacuncensored@gmail.com, and I will answer it as the best way that I can. Looks like this thing ended, so let me close this out. Thanks, everybody. I appreciate you. Make sure you follow the podcast and all the social media sites, and download the audio podcast so we can get out to more people. With that being said, I'll talk with you mofos next week. See ya.
Welcome to the #1 rated HVAC podcast. If you're looking to grow in the HVAC industry, then you're in the right spot. Blue collar people talking about blue collar shit. Let's get better together. So turn up the volume, buckle your seatbelt, and let's welcome your host, Gil KV Jr.